So taking into account the effects of restrictive monetary policy actions that we've taken, I expect GDP growth to slow this year to around 1.25%, and for the unemployment rate to rise somewhat to about 4%. I expect PCE inflation to continue to slow to around 2.25% this year before reaching our 2% longer run goal next year. All of that said, the future remains uncertain. The risks are two-sided, with the possibility of supply-demand imbalances or inflation remaining stubbornly persistent, weighed against that of a weaker than expected economy and labor market. My base case is that the current restrictive stance in monetary policy will continue to restore balance and bring inflation back to our 2% longer run goal. I'll expect that we will need to maintain a restrictive stance of policy for some time to fully achieve our goals, and it will only be appropriate to dial back the degree of policy restraint when we're confident that inflation is moving toward 2% on a sustained basis. Again, I'll highlight that the outlook remains highly uncertain, and I will continue to carefully watch and assess the data to judge whether the stance of monetary policy is best positioned to achieve our goals. Our policy decisions will be made meeting by meeting and will follow another rule of three by looking at the totality of the incoming data, the evolving outlook, and the balance of risks.